Hi everyone, Joe Gentili from Left Tail Risk Advisors. In this video, I want to go through some aspects of long-term care insurance and the basic pieces of that insurance. So we have a previous video that we made that we went through the different types of structures that are out there to provide long-term care insurance through long-term care insurance riders, standalones, hybrids. But in this, we want to go through, I guess, just basically what long-term care insurance covers, regardless of the form that you buy it in and what's the basic components or guts of a typical policy. So long-term care insurance is not health insurance. This is not insurance to cover acute medical events. This is to cover custodial care or help with daily living when you have a chronic illness or you have some sort of extended period of time with which you need help. It doesn't need to be illness triggered per se. It basically, to trigger coverage, you have to show that you can't do 2 out of 6 activities of daily living. And those activities are, I forget them sometimes. It's bathing, dressing, eating, toileting, transferring, and continence. So if you can't do 2 of those 6 activities, regardless of the reason, that's what triggers a claim. Also, another thing could be cognitive impairment. So if you have cognitive impairment that basically prevents you from taking care of yourself, that's something else that could trigger a claim as well. So what care actually looks like, most people think of nursing homes when they think of long-term care insurance, but extended care is provided on a continuum, and nursing care is at the end of that continuum. That is the most comprehensive and the most expensive way to provide extended long-term care. On the other end of the spectrum, and this is where the majority of claims land, is home care, where people want to and get to stay at home and they have the assistance of home health aides in order to keep them at home and to try to keep them from going further along on that spectrum, to keep them in their home and in their community for as long and as comfortable as possible. So that's what care actually looks like. What the structure of the policies, how they work, is there's really, I would say, 3 levers here that are most important when you're buying coverage. So number one is what's the benefit amount, and that benefit amount can be expressed in terms of a daily amount of money to use, $350 a day, whatever it may be, to a monthly benefit. So there's going to be that, and there's going to be the benefit period for how long you have coverage for, and that's usually expressed in terms of years. It could be 3 years, 5 years, whatever that may be. And effectively, what these things are is those two numbers combined is the pool of money that you have available to address your needs. And that money can be, if you have for instance, a reimbursement type policy, which most policies are today, if you're spending less than the dollar amount that you have, the coverage could extend beyond the 3 or 5 year that you have. It really extends until the pool of money that you have runs out. So those two things are very important. What's your daily or monthly benefit amount, and what's your benefit period? And then also, most policies are reimbursement based, so you get money paid based off the amount of money you actually spend. Some policies are indemnity based, where when you have a claim triggered, you get a certain amount per day, and then you have to spend it as you like. Finally, there's the elimination period. That's the amount of time that once you qualify for a claim, you wait until the insurance actually starts paying and kicks in. That's a lever that exists to, I guess, give people the flexibility of having some control over the price of the policy or the premium amount. The longer you have an elimination period for, the lower the insurance will be. So if you have a 30-day elimination period, that's going to be a lot more expensive to get than a 90-day elimination period. So there's that lever. And then there's riders that go along. The most impactful rider is probably the inflation related riders, whether you want to have inflation protection, and if so, how much. If it's kind of obvious, if you have a policy and you don't use it for, hopefully, for decades, if you're going to use it, If you don't have inflation protection, you're kind of losing insurance every year in a real sense, where the inflation protection, if you have it, it gives you more protection or it keeps you at a level place as time goes on. And obviously, those inflation protections come at a cost. There's going to be more premium to have that. And again, I want to go to why this insurance is um, so important for people is because there's care episodes are not uncommon. It's not uncommon for people as they age, especially if they live a long life, where they're going to have periods of time, sometimes years, where they're not going to be able to care for themselves without help. And that could come through an injury, it could come through illness, it could just come through old age. So it's a real possibility for everyone. And if you feel like you can live a long life, and a lot of people will, this is something that can happen. And then the care is going to happen. Like you're going to get your care, right? The point of the insurance is twofold. I'd say threefold. Number one, you want to protect your family because when you have that care need, your family is likely going to be the people that step into the breach to provide that care, at least initially. It's going to be your spouse, it's going to be your children. And providing that care can turn their worlds upside down. They will do it. In most cases, you have a family and your family loves you. But if you can plan ahead of time to make that task easy for them, where their primary job is coordinating the care as opposed to actually providing the care, especially if this is something that could go on for a long period of time, you are doing a real service to them in doing that. So that's the number one benefit that I think you get out of long-term care insurance. The second benefit, and it's related, is protecting your income and your spouse's income. Most long-term care claims are going to happen into retirement after people stop working. And for people that are retired, their income is very much tied to their assets. So some people have the idea that if they have a long-term care need, they are going to self-fund it out of assets that they have. Long-term care is really expensive. It's really expensive to provide for home health aides or institutional services. So if you decide to go down that route and you're spending assets, you are basically taking away future income in terms of doing that in present income. So your standard of living, if and when you recover, is going to be reduced. Your spouse's standard of living is also going to be reduced for their life. So you want to protect the income in retirement. And finally, for yourself, if the idea is that you're relying on Medicare or Medicaid planning to take care of this, well, Medicare does not cover long-term care needs. Medicare only covers acute needs for a short period of time. So if you have extended care and you have custodial care, Medicare will not cover that at all. Medicaid, in some instances, will cover long-term care, but there's two really big caveats to that. Caveat number one is that it requires you to spend down your assets, gift away your assets. So there's a lot of unpleasant planning and intentionally um, impoverishing yourself in order to have Medicaid cover. And when Medicaid does cover, you're going to the most severe or the highest form of coverage right away, which is the nursing home. It doesn't cover home care. So there's a lot of reasons why you want to have long-term care insurance in place. For most people, the ideal time to start thinking about this is probably going to be sometime in their early 50s onward. That is when most people consider buying these policies, but I would really encourage people to consider getting coverage for this because from personal experience, having gone through being one of the people that provides care, it's a lot. Your family will do it, and no matter what the cost, they're going to do it. But to the extent that you could plan ahead and make that easier for them, that is a very, very substantial gift that you can give your family. So if you have any questions on long-term care insurance or any other types of insurance, I really encourage you to reach out. Happy to talk. And if this was useful, again, encourage you to subscribe. We're making a lot more videos on these topics. So thank you.